Welcome to Stock Talk with Mike. I want to another video on Coupang, the e-commerce leader in South Korea. I did a video on them a couple weeks ago, but there's some new data I'd love to share with you. I want to cover some new institutional buying in Coupang and also look a little more at their valuation, comparing them to some other emerging market e-commerce players, so that'll be interesting. The stock's had a bit of a rough go as of late, and I want to talk about why I think this could be a good entry point into Coupang. I know I already have a fairly hefty position and I'm really considering adding to that position this week. So before I get into it, if you're new to the channel, please consider subscribing. I like to cover a lot of high growth stocks and stocks that I personally have strong conviction and invest in with my own money. I like to cover earnings calls, earnings reports, also looking deep at their valuation and other data related to these companies. So let's get into it. All right, so looking at their stock chart here, again, Coupang just came public back in March, so relatively new IPO, and they've traded up as high in the 52-week range here. They've traded as high as $69 a share earlier this year and traded as low as $30.18. Currently, definitely at the bottom end of that range. So just looking here a little more detail at the chart, you can see we're definitely down near the lows. And I think this is an interesting level as I'm going to get into. I'm not looking at technicals, but just looking at them from a valuation perspective and where I think this stock fundamentally is headed over the long term. I think there's a lot of growth and margin improvements ahead for Coupang. Actually, one thing to keep in mind though, before I get into some of the valuation, is share lockup period. So this isn't something that I really trade around or worry about, but one thing you have to keep in mind with new IPOs is as share lockup expiration approaches, it can often put a little pressure on stocks as people get concerned about basically insiders dumping their shares once their initial share lockup period expires. So usually there's a lockup period where insiders in the company can't sell their shares when they go public for a period of time. And usually that's 180 days. So usually that's a 6-month period. So I think for Coupang, technically the share lockup period is September 7th, 2021. So that's coming up shortly. That might be waning on the stock a little bit. But again, it's really short-term noise. And if a company's executing, those insiders are going to want to hold. And even if they do sell, often it can just be buying opportunities as long as the company is executing. But one thing to keep in mind with Coupang is they actually allowed insiders to sell at IPO as well. So a little bit a difference of an approach is they actually had early share lockup agreement in place that released a number of shares. I think it was like 34 million shares by employees. But the executive team was not able to sell at that initial share lockup period, so expiration. So they have to wait the full lockup period here into September to potentially sell if they wanted to. So just something to keep in mind. Again, I find it really a non-event, but I know a lot of people ask questions about share lockup periods, so I wanted to cover that there. So I have done a couple videos now on Coupang. As I mentioned, they're an e-commerce player in South Korea. Korea as a whole is just super conducive to e-commerce. It's geographically small, but have quite a large population base of over 50 billion people. So I think it's about 1/6 the size of the United States. So it's a decent sized country, very tech savvy, definitely connected, high internet penetration, all that. And Coupang is in all those avenues you could expect from a typical e-commerce leader, as far as food delivery, a rapid delivery, all this stuff. And they really, much like Amazon, really focus on being customer centric and offering top-notch customer service. They have something called Dawn Delivery where millions of different items, if you order before midnight, you get it by 7 a.m. the next day. So we think of how phenomenal our Amazon experience is and in North America, where we can order and we have something often the next day. Well, really, Coupang is taking this to a total different level. And they also have zero packaging for a number of products. So they have these reusable bags, basically, that they will bring your product in, and then you can leave them outside your door and they pick them back up. Even returns, they actually have very frictionless returns. Basically, you just you just press a button on your phone, you go put, maybe that shirt didn't fit or whatever, and you just go sit it outside your front door and someone comes and picks it up. So pretty phenomenal. They also have Coupang Fresh, so they're in food delivery as well. So a bunch of these big growth drivers for them. And really, they have phenomenal market share in South Korea, but there's still a lot of room for growth. E-commerce is still growing in South Korea, just like it is much in a bunch of developed countries. And they still have a lot of room. I think they have about 16% of the market, even though they're a dominant player. So lots of room for additional growth. They did just report Q2 earnings a couple weeks ago, August 11th. And some of the numbers were just phenomenal. I'm just going to read some of the highlights, because they are pretty good. Total net revenues continue to grow at a multiple of the Korean e-commerce segment. So they're definitely growing faster than e-commerce in general in Korea, which means they're continuing to gain market share. That's very important. Growing 71% on a reported basis. It's always worth noting with all of these emerging market plays or international plays is you do want to look at the currency, so that they'll report their constant currency basis, because some of that growth might just be from exchange benefits from like a weak US dollar, etc. So pay attention to that. But their growth was 57% in a constant currency basis. Our flywheel continues to propel strong growth across all our product offerings. Q2 marked the 15th consecutive quarter with over 50% year-over-year constant currency basis revenue growth. So just incredible growth. They have a long history of big growth. Our top of the funnel continues to expand as the total active customers increased 26% year over year. For a relatively mature company, that is pretty phenomenal, to 17 million, and revenue per active customer grew to 36% year over year. Gross profit was 658 million in the second quarter, which was a growth of 50% year over year. So although they're not profitable, they're close, and we're seeing gross profit grow exponentially. So that's great. And if you exclude 150 million in inventory write-offs related to a fire at one of their fulfillment centers, their gross profit increased 86% year over year. It's worth excluding it because it showed up as an expense. The inventory basically in this fulfillment center showed up as an expense, but they do have insurance, which is ultimately going to cover those expenses, but it didn't show up in the balance sheet in Q2 because they haven't had their insurance payout yet. And in Q2 2021, direct investments related to just 2 of our new initiatives, and this is like with a lot of growth companies reinvesting in their growth as to why they're not profitable, but you can really see some good margins here in components of Coupang's business, which makes me think it's going to be a highly profitable business. But 2 initiatives, our grocery offering, Rocket Fresh, and our food delivery offering, Coupang Eats, accounted for almost the entire adjusted EBITDA loss, which highlights the profitability in their mature offerings. So definitely worth keeping that in mind. So yeah, some really impressive stuff from Coupang. And just looking at their valuation, again, a little more, comparing them to some other e-commerce players. So I put them up. So Coupang, a ticker CPNG, up against C Limited, the Singapore, Southeast Asia e-commerce play. Again, they have other components of business, and all these businesses are a little bit different, but these are some good comparables, I think. And Mercado Libre, the Latin America e-commerce player. So Coupang, definitely the smallest of the bunch. It's about half the size of Meli with a $54 billion market cap. Mercado Libre, 93. C Limited, much larger, at $172 billion market cap. So you can see there's a lot of potential opportunity to get to that size. You know, when you have companies like Amazon, obviously they've got a huge addressable market, but like a 1.6 trillion. They also have, you know, obviously other business segments that maybe Coupang doesn't have, like cloud computing, web services, all that stuff. But and then as far as revenue growth, just looking at last Q2, Coupang 71%. That's huge, big player, big time growth. Definitely high growth territory company. C Limited just off the charts high growth last quarter, 159%. Mercado Libre, same thing, 94%. But Coupang, I think you can put in the category of high growth company, even though it's not quite at those levels. But this is where things start to get interesting. You look at a price to sales multiple. Coupang just trades at 3.4 times. That's a lower sales multiple than a mature company like Amazon, which has, you know, a little bit slower growth than Coupang, more in like the 30 to 40% range now. But Coupang, and, you know, obviously Amazon deserves a rich multiple. It's executed forever, right? 20 plus years. But 3.4 times. You look at C Limited, they're trading at 25.2. I wrote percent, but this should be times. And Meli, Mercado Libre, 16.9 times. So much cheaper on a price to sales multiple. As far as profit margin, Coupang, negative 6.9% trailing 12 months, whereas C Limited, negative 26.4%. So quite negative. And Meli was just slightly negative, very close to profitability. I put them at 0% profit margin. So a little more, a little closer to profitability. But still quite impressive. I think Coupang looks pretty attractive here, at least on a price to sales multiple. And like, you know, I know I said there's a number of companies lately that I follow that they're getting close to profitability, but you can really see it there with Coupang and definitely in their mature business lines. And the balance sheet, they got a nice healthy balance sheet. At least as far as like net cash, when you take out debts, they're sitting at about 2.3 billion. They have over 4 billion cash, but they got a little bit of debt as well. So it's nice to see that they're sitting on a lot of cash. 2.3 billion is nothing to sneeze at for only a $54 billion total market cap company, right? That's decent. C has a pretty strong balance sheet with 4.9 billion, but again, they're operating at a bigger loss and a much larger company. And Mercado Libre actually has a negative balance sheet. They have more debt than cash, sitting on negative 2.5 billion in debt. So definitely, I'd say Coupang has one of the stronger balance sheets of the three. All right. And then I did say I wanted to touch on hedge funds and money managers buying a Coupang. So I covered this in my last video, but I only had Q1 data, but we got some new Q2 data here, and it's quite promising. Even though the share price hasn't really reflected a hot demand, you can see that institutions are starting to get notice of this company and are starting to accumulate some shares here, and institutional ownership by money managers and hedge funds is getting relatively high. So there's now 250 funds holding. When I gave the report a couple weeks ago on this, I had Q1 results, and I said 188 because that was what they had the quarter prior. And percent ownership by institutions now up to 78%, and that's up from 69. So all headed in the right position. New positions is 101, and there's 186 new positions last quarter. But last quarter was really the first quarter of data we had. So, you know, I don't think that's surprising at all. And then we see that, so between new positions, increased positions, we have over 170, and then we only have 40 closed and 40 reduced. So there's more new and increased than there is closed and reduced. And total calls, which is a bullish signal, is over 50% higher than puts, which is a bearish signal, obviously. So definitely more calls than puts in Coupang by these money managers. So that's really positive data that institutions are getting on board with this stock. You know, and then we look at funds holding. There's some really high concentrations of Coupang. This is looking at, I sorted this by percentage of their portfolio of these funds that hold Coupang. Green Oaks Capital, 93% of their portfolio, so that's just insane. But SB Investments, 46%. SCHF, I don't know what that is or who that is, but 44%, Maverick Capital, 42%, and, you know, a number of others, 38, 23%, 10%. So big portfolio allocations here to Coupang. And also interesting is the analyst rating. So not a lot of coverage here. We got 4 analysts currently covering the stock, and that's why I think this is a good time to get in. There's not a lot of coverage yet, but this is a company that is doing very well. The average price target on the street is $48 a share, and we're sitting at $30.86 a share. So that average price target represents a 55.5% upside over the next 52 weeks. You got to take these analyst targets with a grain of salt, but you look at these, the lowest on the street is 40, which is still massive upside from here. I don't know what that is, 30% or so. And the high on the street is 62. That's more than a double from here. So definitely that's a positive indicator, at least as far as analysts go on Coupang. So again, I really like Coupang here. You know, trading down here at $30 a share, trading around 3 times sales, and with expected 30 or 40% growth moving forward, you can see as a company trading at, you know, less than maybe 2 times sales next year. So, or just over 2 times sales. So looking more attractive there. And I think once they get their insurance payout from the fire, that's going to be a non-starter, and the balance sheet will look a lot cleaner with that off the books. As far as me putting my money where my mouth is in Coupang, we go to my portfolio. I hold it in my growth portfolio. I like to plug all my holdings into Yahoo so I can sort them by like whether I have them in staples or my growth portfolio. And then it brings all my different investment accounts together, which I don't have when you think of different brokerages or whatnot. I can look at it all in one place, and I haven't found an easy way to do that yet. I find Yahoo the easiest to do that, just to plug them in all in manually. But in Coupang, oops, go back here. Coupang, here's my holdings in Coupang. All right, there we go. So I have been plugging away. I first bought Coupang actually back in March at $44.50 a share. Did quite well at first, going up to like 60. And I've been slowly accumulating. And I most recently bought in August, on August 12th at $34.14 a share. Currently at 30 here. Definitely looking to add maybe a couple grand more. The lowest I've purchased Coupang is $31.28. So I think there's a bit of an opportunity here to lower my cost basis, but I'm okay with these low prices, and being down overall 18.5% isn't that concerning to me. Given that I'm in sort of the accumulation phase in this stock. This is a relatively new position for me just this year. If I was down 20% and this was a long-term hold and I've had it for like 3 or 4 years at this point, I'd be a little disappointed in the performance. But actually, I look at this as an opportunity as a company I'm building out a position in. Most companies that I feel like I've held for the long term have performed very well over time for me. But this is a new position for me. It's currently what, my 7th largest position in my growth portfolio. So it's probably like my 8th or 9th largest position total in my investment accounts. So yeah, it's a pretty high conviction stock for me. So anyways, that's about all I have for you today. Thank you so much for watching. Happy investing.